Let's talk about some other aspects of the currency strength indicator and how to use it and how it will help you in your forex trading. As I mentioned in an earlier video, it's really your radar on the market. It is breaking the complex world of currency pairs down into the individual currencies, the individual building blocks of the forex market. And it's always the starting point because it will give you a heads up as to which currency pairs are likely to be trending strongly, either rising strongly or falling strongly. But in addition to that, it will also tell you which currency pairs to perhaps not consider for the time being. And the reason for that is very simple. When you actually consider the direction of the currencies and how they're moving. So for example, if we look at this 5-minute time frame here, you can see that we have the Japanese yen here is climbing. It's climbing with the Aussie dollar. So if you were to look at a chart right now on that particular time frame for the Aussie yen, the price action will be in congestion because there's no divergence. In other words, both of these currencies are being bought right now, and therefore there's no differential momentum to drive the currency in a trend. And the analogy you can think of, it's one I've used many times in the webinars, is think of it as two trains traveling in the same direction, leaving a station. Now, they may be traveling at slightly different speeds, but the actual differential speed between those two is very limited. However, if you have two trains traveling in opposite directions, clearly there is huge differential speed between those two trains. They're traveling towards one another, and the closing speed is very high. And it's a similar sort of principle here. As I say, you can see the Aussie, the blue line, is rising. It's rising with the yen. And the same is true over here on the 10-minute time frame. So we've got the Aussie and yen rising. So there is no differential momentum to drive that currency in a trend. Now, if you were to look at, let's pick out an example. If, for example, you were to look at the dollar here, which is falling strongly, and the Japanese yen, which is rising strongly, there you would have a strong trend because you've got heavy selling of the dollar and you've got equal buying of the Japanese yen. So without even looking at a chart, I can tell you that there is a strong trend developing purely because you have strong selling in one and strong buying in the other. It's as simple as that. Give you another example here. We look at the dollar and we look at the Canadian dollar here. So these two are both falling. Now there may be a very minor trend because the dollar is perhaps falling slightly more strongly than the Canadian. But nevertheless, the trend in that particular pair would be very limited. And from a trading perspective, you need to know this information because it just tells you straight away this is not a pair that I'm going to consider right now on this particular time frame or on your array of time horizons. We always recommend using 3, both for your charting and for your indicators. I'm not going to look at that one right now because clearly they're traveling in the same direction and therefore there's no great trend. So I'm going to look at ones which have strong strength, either strength or weakness, and go and look at those charts for those particular opportunities for trading those pairs right now. So the currency strength indicator not only tells you which pairs to consider, which pairs to pick out of your chosen time window, it also tells you which pairs are not worth considering right now because they are traveling in the same direction. As I said in a previous video, when you get a currency, you can see here the euro really is really going nowhere at the moment. It's just going sideways. It's going sideways here. It's also going sideways on the 10 minutes. So for the time being, the euro hasn't got much momentum in it. Now, it may have some minor momentum if a euro pair is being driven by strong selling. For example, in euro dollar, we've got very strong selling in the dollar. Now, that may be enough to drive a minor trend, but it's certainly not going to be the strongest trend, certainly one that you wouldn't particularly go and look at right now. So it's an important aspect of the currency strength indicator. It really is your radar on the currency world. It tells you which currencies to go and consider and which ones perhaps to avoid if they're traveling either in a sideways movement, in which case they're going to be in congestion anyway, or alternatively where you have two currencies which are generally traveling in the same direction, you will have the same thing appearing on the chart. In other words, a congestion phase. So they're ones not to consider. What you're looking for all the time are those currencies which are either moving very sharply higher or moving very sharply lower. And then you go and look at those, because those are where the strong trends will be. So I hope that's explained that to you. More videos to come on this. Thanks very much indeed for watching, and see you soon, and bye for now.